Okay, it is time to begin. So we want to welcome everybody to our 2026 legislative forecast that's focusing on proposed bills and proposed legislation impacting community associations in Utah. We appreciate all of you taking the time to join us today and to stay informed on this proposed legislation. I'm Quinn Sperry. I'm an attorney with the law firm of Jenkins Bagley Sperry. I currently serve as the vice chair of our Legislative Action Committee for the Utah chapter of Community Associations Institute. All of our presenters today are board members of our Legislative Action Committee, or LAC. We'll start with the Tyler Lamar. He's an attorney with Miller Harrison. He currently serves as the chair of LAC. We also have Bruce Cutler, who is one of our board members representing homeowners in community associations. And he's also a former Utah legislator, so he has some great insight. And then Ryan Bonham with Advanced Community Services, or ACS, they're a community property management company in Utah. We'll be focusing on three bills today, three main bills. And if you have any questions during the presentation, use the chat feature. I'll be monitoring that and then interjecting so that we can ask the presenters those questions as they come up. So we will go ahead and start. Tyler, why don't you start with Representative Walter's bill?
Thank you, Quinn. Appreciate it. Let me just get this started. Representative Walter out of Southern Utah, District 74. As you know, he sponsored a bill last year that created the Ombudsman's Office, the HOA Ombudsman's Office. He also coordinated with Jordan Tusher to incorporate Jordan Tusher's bill on the last day of the session into his bill. And Jordan's bill addressed limits on rulemaking and other various HOA related matters. This is round two now from Representative Walter. The intent is to do some cleanup and some further adjustments to both the ombudsman bill and some other unrelated issues in HOAs. Okay, first, the bill sets requirements for the ombudsman's office to publish information on their website that specifically calls out the rights and responsibilities of owners in HOAs. This idea came up after certain homeowners reached out to all the lawmakers in the legislature and urged them to adopt an HOA Bill of Rights. That was discussed, and ultimately the decision was made in consultation with Utah's LAC and others that that was probably unnecessary, but maybe there could be a compromise that would allow owners to become more educated by being informed through this online resource created by the Ombudsman's Office of their rights and responsibilities. As part of that, though, the Ombudsman's Office is supposed to publish information if this were to go through and to pass. And that's actually a big disclaimer. I'm going to pause for a second. Everything we're presenting on today is a forecast. These are just ideas that have been put into a bill, and they're now published bills, everything we're going to present on, but they are not yet passed. We don't know yet if these will even make it out of committee and if they'll pass both chambers of our legislature. So I want to give that disclaimer because I don't want to create any confusion. If this bill passes, it would also require that the Ombudsman's Office publish information about how to, quote, dismantle an HOA. And I'm really curious to see what they come up with on this information because we've done a few times our office has assisted in dissolving an HOA, but it's very rare and it's usually very difficult to achieve the necessary votes. And it's a unique type of HOA that is even eligible for dissolution. Many HOAs, there really wouldn't be a practical way to dissolve it. But that's kind of an interesting proposal that's been made, is that they must publish information to the public about how to dismantle an HOA. The bill also proposes to change the process for applications for a ombudsman's opinion. It requires that the application identify specific acts that are alleged to be in error or against the law, that it also allege and identify specific impacts to the person making the complaint, with the intent of weeding out ombudsman's opinions that are just academic in nature or technical in nature, where there has been no impact to the person making the complaint. It also makes the application fee of $150 non-refundable. If it were to pass, it doesn't matter if your ombudsman's opinion is successful or not, you don't get a refund. Uh, Whereas currently there's a scheme where you might be eligible to receive a refund of the fee that you paid. The bill also prohibits binding arbitration as a form or a prerequisite before being eligible for an ombudsman opinion. We can still require, if this passes, that an owner filing a complaint go through an alternative dispute resolution process or through some kind of pre-filing um, hearing process or complaint process with the HOA, but this would eliminate binding arbitration as one of the options. That actually makes a lot of sense to me, because if it's binding arbitration, you would never be eligible to get an opinion, because one of the jurisdictional limitations is the ombudsman's office cannot issue an opinion if it's gone to litigation or is already a final binding decision has been made and adjudicated. Um, and then lastly, as it relates to the ombudsman, it reduces the civil penalty that an HOA could face down to a cap of $5,000. So rather than being $250 per day, if this passes, the penalty that an HOA could face if the issue gets litigated in court and a decision is comes out that's consistent with the ombudsman opinion, the max penalty that the HOA could face in that instance would be $5,000 rather than $250 a day. So that actually could be a significant improvement. However, as it stands, LAC has voted that it cannot support Representative Walter's bill. As you'll see, there's sections in here that create deep concern for our industry, and we feel that the harmful aspects of the bill outweigh some of these positive changes and improvements. And so we are hoping that there will be an opportunity for further dialogue. We believe there will be. And if there is not, we will be asking the public and you all to join us in opposing this bill. All right, there's some other miscellaneous aspects to the bill. I'm not going to touch on all of these. Ryan Bonham's going to present in depth about this item number one, which a positive aspect of it, it renames association transfer fee, which we found to be a problematic label. It would rename that to administrative setup fee, which is more customary and appropriate to how we use that term in the industry. However, in renaming it, it also sets a maximum fee, a fee cap at $200. And Ryan will be talking in depth about that. Next, unrelated to the ombudsman, Representative Walter's bill attempts to further address when the Community Association Act applies to an association. And this was prompted by a request from the Ombudsman's office to further clarify that. As you know, some pre-2004 HOAs, that's before the Community Association Act existed, there can be some ambiguity and some questions can arise as to whether the Community Association Act applies to your HOA. So it was 3 or 4 years ago, LAC drafted a bill that was adopted that clarifies that when you register on the HOA registry, the Community Association Act becomes applicable to your association. This bill kind of tinkers with that further, and it allows the board to clarify that. Sorry, I'm going to skip back there. We've got somewhat control on some of these slides. It allows the board to make it applicable by resolution of the board, which I don't know that we have concerns over that. Where I do have concerns is that it makes the Community Association Act the default if a condo declaration is silent about what law applies. So my concern is, although most condo declarations do specify that the Condo Act applies, if we have a situation where it's a condo plat, it's always been treated as a condo. If the language in the declaration is insufficient to identify the Condo Act, this bill would say that the Community Association Act applies to that. And I have concerns about the ambiguity and confusion that that might cause in our industry. Okay. Additionally, it attempts to reconcile certain areas in the Condo Act that are not currently in conformity with the Community Association Act. So, for example, there's a budget approval process that's currently drafted in the Community Association Act, which is not in the Condo Act. This bill would say that condo budgets now have to be adopted according to that same process and would be subject to an owner veto of a 51% owner vote. Um, Bruce is going to talk about number two here in depth. It also requires that board members publish their personal information on the HOA registry, which we have deep concerns about that. It applies the limited fiduciary duties of condo developers in the Condo Act. That was something that happened last year in the Community Association Act. This would bring that section over to the Condo Act. We thought that was happening last year, but for whatever reason, in the final codified version, it didn't get included. So that's really just completing what was intended to have happened last year. Number four is kind of an interesting one. It calls out that the records of an association, the financial records that are often kept by a management company, this has a provision that says that those documents are the property of the association, and it makes it unlawful for someone to not turn over those records by the managing agent at the request of the association. So they're attempting to address a problem that many of us have encountered where there's a change in management companies and there can be a delay in transferring documents or a dispute over who controls or owns those records of the association. So it's attempting to fix that problem. Another positive change would be that it would allow currently you have 2 weeks to respond to a records request. And it would change that to 10 business days. Sometimes when these records requests come in over a holiday or on a weekend, it shortens the time from a practical standpoint to respond. This would allow it to be 10 business days rather than 14 calendar days, which would again be a positive improvement to the records statute. Quinn, do we have any questions yet? Have you seen anything come through on the chat?
Yeah, there's been two. I responded. The first one was just, is LAC working against HB 406? You had
Gotcha.
touched on that. I gave more details that we are engaged in discussions with Representative Walter and reiterate that if he's not willing to incorporate some of our suggestions, we'll reach back out with a call to action. The other one that just came in is what personal information would be required to publish on the HOA registry, and Bruce is going to be
Bruce is
going
going to
into
get it.
detail on
Yeah.
that.
So let me just add to that, Quinn, that I think we welcome you. If you have concerns about anything we're presenting on HB 406 today, we welcome you to reach out to your representative and to Representative Walter specifically to explain the impact to you or to your clients and customers and why you have concerns. Those type of emails and communication, that makes a big difference. So we welcome that. Um, and we will certainly intend to do a more robust call to action here in coming days. All right, Ryan.
Great. I'm going to talk a little bit about the administrative setup fee. And first, wanted to say thanks to both Michael Johnson and Sarah McConkey for their work. A bunch of these notes are produced and kind of in conversations and work that's been done by them. And so wanted to make sure that they receive some credit for the time and effort they've put into it. Um, I wanted to outline what is the administration fee? What is it trying to address? For those that are part of a management company, they're going to fully understand this, but I think it's informative to those that aren't necessarily tied with management companies to understand the details. Um, in the administrative fee, the setup fee is really tied to real estate sales. When a homeowner sells a unit within an HOA, and we've outlined a bunch of the details that can happen. There's a huge variation in each one of those cells and how it works across the many different types of communities. But 5 to 7 stakeholders in every cell. That's buyers, sellers, mortgage companies, title companies, and nearly all of them are reaching out to management companies. At our company, we get about 30% of our overall phone calls are regarding real estate sales. That's an incredibly large amount of calls that we handle all and are trying to help with those sales, but obviously that requires some compensation and pay for staff to be able to answer those phone calls. Their standard requests will include documents. Interestingly enough, we'll get title companies that should be searching the titles of the homes, but they ask us for the governing documents that are on title and any other records. They ask us for that liability so that we're disclosing those and try to push that off to management company. The liability of failure to disclose or what they disclosed, and then they have us kind of ensuring that everything was properly disclosed. Additional documents include rules, financial reports, reserve analyses, meeting minutes, payoff statements, and many other documents that the banks are requiring or title companies need to make sure that they have those disclosures to the homeowners, the new buyers. In addition to those documents, they make a lot of, I've seen 300, 400 questions sometimes tied in with these condo certs that they have and their requests for rental restrictions or delinquencies, and it varies on every single community. So there's a lot of questions outside of just document requests that they're asking, sometimes including the interpretation of those documents and saying, how do we follow this? Where are your rentals at? What other items are a part of it? Um, and then the second part of this administrative fee that's not directly tied to disclosures for the actual transfer is tied to transitioning the information within the management company systems and the HOA. And that's goes as far as communicating with new homeowners, right? Telling them how to reserve a clubhouse, telling them what the rental rules are, and then communicating with all these new individuals that are moving in. And that's really part of that administrative setup fee that can be quite a bit of amount of work. Know that this law is trying to limit that fee to $200 per transaction, per unit that moves over. And our position as a LAC is that there shouldn't be any limit on it, that we should have the free market establish that limit based on agreements and contracts that management companies have with communities. And any of those charges should be based on the free market, not on some ambiguous cap that legislators are trying to put on it. Outlined a couple different points on why cap creates a problem. First and foremost, a singular cap across the entire state doesn't account for the variability of work that needs to be done, right? Every community is different. Every management company operates differently, and has different processes to handle these types of requests. So some transactions in and of themselves may be very simple and straightforward, while others could take many hours, 30, 40 hours to complete a transaction. Um, any work not paid, the second point here is that if we're not paying for those charges through an administrative fee that's adjusted and agreed upon by the management companies and the boards, then that's just going to mean that the HOA dues go up. And so now we have a case where all of the homeowners across the entire community are paying for one transaction. They're paying for a homeowner to sell their property as opposed to that being charged to the homeowner that's buying or selling and a part of that transaction, and that becomes part of the dues. That should be a significant concern for every homeowner in every community that they're going to be subsidizing out of their HOA fees transactions for a singular sell and to the benefit of one home. Third is that free market. Free market should prevail. I have yet to ever experience when the government sets a price that it helps things get cheaper. It doesn't. The government doesn't do a good job with free markets. The government steps in and all of a sudden things get more expensive. It will not help with home affordability, which is one of the core arguments that these real estate agents that are trying to pass this law, and Representative Walter is a real estate agent builder. And so he's saying we should protect our real estate fees and the title fees so that we can limit any other fees that are associated with that transaction. Obviously, the real estate world is not going to be arguing to limit their real estate fees and those transactions and cut their prices down under state statute. The final point here is whatever amount is chosen, it was going to just be arbitrary, right? Where does $200 come from? Where does $500 come from? Any amount that's chosen is not going to reflect the services provided or even reduce the service response times and provide additional information. A standard fee is going to make management companies do less, right? Not try to provide service, not try to be efficient in trying to get this done because it's just a set fee through the state.
Ryan, we do have, well, there's a couple of questions.
Yeah, go for it.
We'll go with Joanne, and then Melissa, I see yours. We'll circle back to that after we're done with this topic. So Joanne is asking, do charges by condo certs or HomeWise count as the administrative setup fee?
Yes. So HomeWise and condo certs, there's also GetDocs Now, are kind of the three national services that management companies provide. Those three services would be included in what they're charging for the processing of this. Yeah.
And then another one came in. What about a set hourly rate for setup fees?
Yeah. I mean, there's alternate solutions that can be negotiated. I think the set hourly rate is going to be a much higher amount than what's being currently charged as set dollar amounts and would be a harder back end process. Having a management company that we help operate, I know if we were trying to track time allotted, how do you track every phone call from a real estate agent and now tracking which cell they're tied to and how much time we're spending? When nearly 30% of our calls are based on real estate sales. And so that tracking of hourly rates and setup fees, I'm not a fan of because that makes it more difficult. We as a company, we use condo certs and we do have a fee that we charge that we feel is a fair amount.
One other thing I'd see with the hourly rate is that fee is often being paid through closing, right? As the title company does it. And so they're reaching out, trying to get those, the charges to show in the settlement statement. And if it's hourly, I mean, that's going to be a changing number, right? I know, and because you guys will spend a different amount of hours. If I remember correctly, Sarah shared with us the nightmare one where I don't know, she can correct me, but in my memory, it was like 40 hours dealing with that one, change. So another one, what do you charge that is a fair amount? Or I guess you could say, what do they think is a fair amount?
So, Quinn, can I chime in on this one a little bit?
Yeah.
I actually want to be super cautious, especially in this forum, about comparing what people charge for a variety of reasons. But one of the main reasons is I don't want to get us into kind of an antitrust price fixing conversation. And it wouldn't be the first time that type of claim or dispute arose from these kind of forums in an industry where people shared with each other what they were charging and what they felt was fair. So I think we got to be cautious about that. But maybe Ryan, it might be helpful. I know there's been
Yeah.
discussion to talk maybe about a range of what you've seen out there in the industry.
What I'll say is these fees are all within the hundreds of dollars, right? I haven't seen anything that's contemplated above hundreds of dollars, not in the thousands, for these setup fees.
I agree with that. I've never seen anything that was more than hundreds of dollars. And I think it's very rare to see a fee like this that even approaches $1,000.
I agree.
The concern is as drafted, there is no escalator for inflation, and it does not match what many people are charging in the industry. Some people are more than double what is currently being proposed right now as the cap. And that's very commonplace.
So we just had another one. Well, one, Mackenzie, emphasizing that if it was hourly, they'd need a updated payoff after every call and every action. And you're correct. I mean, that's one of the difficult things in setting it hourly and or doing hourly rate rather than a set fee. Another one, many CCNRs have these fees outlined with an amount or range between $200 to $300.
I haven't,
Would
I don't know that
CCNRs
it's,
have to be amended to set a new amount?
Can I address that? I think they might be confusing a reinvestment fee with the setup fee. Maybe Brian, do you want to address that? The difference and
yeah.
distinction there?
Yeah, so a reinvestment fee, which is why the name changed. Tyler, if you go back to your slide, this is where we're changing the name and this becomes significant, right? So this was instituted, this limitation on a dollar amount was instituted last year, and it was titled this association transfer fee, which was also kind of loosely associated with the reinvestment fee because our laws 12 years ago it outlawed basically a transfer fee and initiated what's called a reinvestment fee. But other states have transfer fees. So that terminology cleanup kind of separates the two and makes it this cleaner administrative setup fee. And there could be a lot of different terms tied around it. That's why I gave a definition of what this kind of is intended to include, right? It's the work on a real estate sale transaction. It's not a reinvestment fee, right? A reinvestment fee has a separate set of laws that outlines requirements to have something filed in your CC&Rs and on title with a notice of reinvestment fee covenant that is not tied to this transaction. Anything
So
else I missed? I mean, it is tied to a real estate sale. It's a separate fee tied to that same real estate sale.
Yeah, and I
That's
think the
correct.
key is it's a fee that's allowed to be charged not by the HOA. It's allowed to be charged by the community association manager directly to somebody coming in that they're helping set up in the HOA. So it doesn't necessarily flow through the HOA that way. So but Elvie, I'd be interested. I see Elvie's comment. I'd be interested in looking at some of those examples of CCNRs that you're seeing and thinking about the implications as it relates to the statute. We welcome that. So feel free to email me. I'll send my email in the chat.
yeah, to address, Brian was asking, how is
Yeah.
this different than the $50 cap found in the statute where it's talking about payoffs, payoff statements? So he mentions 57.8A 106. Um, that's different. That's if they're calling and actually asking what is the payoff amount, whereas that payoff on a transfer would include the administrative setup fee.
So to add to that, Quinn, payoff statements that are the one that Brian's asking about, those are not only unique to a transfer of property,
Right.
that could apply to a refinance or, a second mortgage. It could apply in a lot of different contexts, whereas the administrative setup fee is a new person coming into the HOA.
It, I'll also say that $50, I don't think I've seen any management companies implement it, but it could be for a homeowner simply requesting a payoff, a statement at any
That's
time.
true.
So it's quite liberal, not relating to any refinancing. It's also just a homeowner's request for a statement that I don't believe anybody really charges that for that purpose, but it does include that.
So okay, we got a couple other questions on this topic. We'll address Mike's and then we'll come back to Janai's. So does does anyone know if the
Yeah.
state if it states it's at close versus pre-close?
So
They
the
think
way
it's
this is
pre-close.
drafted and defined is that it's a fee due and payable at closing. So it's not a fee that you could impose and collect prior to closing. It's due and payable at closing.
Yeah, and I think that makes sense, right? Is it's due when a transfer is actually taking place.
And let me bring that up. That's actually another point why a set amount doesn't, that the state's setting in, because now you're not going to get paid unless it closes, and you will have done all of the work disclosing all that information at their request before the transaction happens. So you could do 5 different sales and disclosures and not get paid at all. So we're not talking about even a singular disclosure anymore. We're talking about multiple to even get paid for one.
Then the other question is, can you clarify the comment that the flat fee amount includes what is charged from condo certs, HomeWise, etc. It's stating the $200, which is currently referenced in the statute and we're opposing. So we'll just talk about it in general. Is that the setup fee? Can you clarify that where, again, the amounts charged by those third parties to assist the management companies in that? Can you just clarify how those work together, Ryan?
Yeah, so this would effectually limit the total amount that you could charge through condo certs for these services, which would include any additional software services that would be part of that. Not even this isn't saying any amount just going to the management company. So if you're using condo certs and there's a $200 charge, condo certs takes $50 of it, the management company's getting 150 for all of their work.
Yeah. And as everybody can see, this is a big issue, right? This putting a cap on the setup fee. It's one of the main things being discussed with Representative Walter. It's problematic, impacts the financials of the management companies, how you operate, and then if you have to charge more, how that flows to the associations. And Ryan, you pointed out that if it's a low amount, all the other owners are then going to be subsidizing, those charges. So I know we've got other things that we need to talk about, so we'll move on to the next one as we're transitioning. I do want to circle back to Melissa's question. Yeah, Melissa, great to see you on here. It's always fantastic to see you and have you participate. She's asking about, expound or clarify on the word dismantling
Yeah,
that's proposed. And I mean, Tyler, I think you touched on it. Me personally, I think it's problematic, right? And I think it's going to promote everybody thinking we can get rid of our HOA.
right,
And when you have all the common area, it's, I mean, it's almost impossible to do, especially in large ones. I don't even think you can do it in condos because,
right,
well, if they're stacked, right? Because you need them to be condos if you're carving up airspace. So,
right.
but feel free to comment more on that.
Well, Florida, you might be aware, is facing a bill that is really aggressively creating a pathway for people to dissolve their HOAs. And we've seen that oftentimes these concepts get discussed at conferences of lawmakers. This is a very, very light version of it. All it's saying is the ombudsman needs to publish information to educate the public about how that could happen. I suspect that what we'll see from the ombudsman's office will highlight many of the practical limitations that Quinn just described, that it may not be a practical or realistic legal solution for most HOAs. The few that we've seen do it are single family detached homes with public roads and really nothing to maintain. And if it was, they found a way to transfer that property to the city or something like that. And those are just very rare. Um, but that's all we know so far is just it would be information published about how to do it.
Yeah. The only ones that I've really seen is where the common area was essentially just the park strip, and either the homeowners took it over or if it was kind of, or they got the city to take it over depending on where it was at. And then also one where the water retention basin was there next to somebody's home and they agreed they'd just take it because they wanted to enlarge their yard. So it's very rare to have that. But, okay. Looks like we moved along in the slides. So Bruce, you're going to be talking about the HOA registry and
I am.
the,
Yes, thank you.
the personal information that
Yes,
everybody wants to have
yes,
out
please
there.
disclose as well. Another source of disclosing your personal information. Here it is. So I'm just going to step you through rather than taking you through live, just going to show you the screens. So this is the HOA Office of Homeowners Ombudsman main page, and you then If you want to select the HO registry, simply click on that button and we move on. Can I control the slides here? Looks like I can. So then you move in and you just type in the HOA or portion of the HOA, so it's a generalized search. And once you do that, you get a list. And since I just typed in HOA, and as you can imagine, I got a list of quite a few HOAs from that. And all it gives me is the association name and the city and county where that HOA is. But then as I select each one of these, I can then go into the 27th Street Condominiums HOA, which is located in Taylorsville. And they've put the contact info on the top there, but you'll notice they have to list the HOA president, the community manager, payoff contact, and all of the board members. Now, they may or may not have listed in this particular instant all of the board members, but they've got one. But notice how they've given a single contact, billing@corehoa.com with a PO box. That's probably their management company. And probably we may have someone from that HOA management company on the line. So they published the names, but they published the telephone number and the office of the management company. And there was, and I'm going to talk about this later, but so this is one way this is done. The other way is, as you can imagine, with a smaller self-managed HOA, they're giving their personal information. So here we've got a townhomes in Gunnison, Utah, and Ephraim, and there's their board members and their payoff contact. It's got their telephone numbers and their address. All had to be put onto the HOA website. Now, we've had some people who are concerned about this. Obviously, that's private information. And so he's proposed in his bill, and by the way, there was one other thing. I'm going to come back to this. I'll come back to the other. In the bill, he simply doesn't require the address of the individual. Still requires the address of the HOA, but now he's not requiring the address of the individual board members, the president, and the payoff contact, so forth. But he's still requiring the telephone number and still requiring the email address if they use an email. Now, it's interesting, there was an opinion just recently, I think it's the last opinion listed on the website, where Mr. Benson said that they didn't list the correct email address and telephone number, that they used the management company's email address and phone number. And the ombudsman said that they must register and renew it, and they have to put each committee member in primary contact. And so they're saying the Desert Edge did not provide the contact information as directed by the committee members, Desert Edge, and therefore violated these requirements. So they issued a statement that said that that particular HOA did it the way we noticed in the first one, where they just listed just the management company's information. But the Ombudsman Office is saying, well, that violates the law. And technically, it does. Now, when we first discussed this as the LAC, I said, I like having all of that information about my board members. But then as we discussed it as a LAC, I realized, yeah, that does reveal a lot of information publicly, and not just statewide, but the internet's worldwide. So now you've revealed this information worldwide to anybody that wants to find out where you live and what your telephone number is. They're taking off the address, but you still got your telephone number. So again, there's privacy issues. Now, I know in my particular HOA, the way we do it is, and I actually do the website for our HOA, I put the names of our contacts, but then say, now you're going to have to go and log in or take the list that was sent to you via email from our president to get the telephone numbers of our board members. So we're not going to publish that on the web. We're not going to make that available to you. We're simply going to tell you, yeah, we'll tell you who they are, but you have to get it. If you live in the community, you can get it. If you don't live in the community, you can't get it. And so the proposed code here is on the left. This is 406. And I just drew up what I thought would be at least sufficient for getting the information that we need, which is simply give me the name, address, telephone number, email address of the association of unit owners. Now, all you have to do that, you've obviously got an address, you've got a name, and if your self-managed, simply go out to Google, create a new email address, or if you've got a website, create an email address that simply says, info at, or in our case, TrimbleCreekHOA.org or .com. Or you can go to Gmail and just say TrimbleCreekHOA@gmail.com. So you can do that and then still fulfill this. And I'm simply saying, and I think we're saying as a committee, that that's really all we need. We just need the contact for the HOA. And then when contacted by a member of the association, they will provide the contact information, the board president contact information. So if I need to get in touch with an HOA, my own or anyone else's, I use that email address or telephone number and say, can you put me in touch with this person? And they verify that I am who I am, who I say I am, and that I need that information. And this wording is just something I threw together. When contacted by a closing agent of a listed property, then you'll give them that information. But I'm simply saying, and we are saying, I believe, that just put on the website the name of the association, the address, a telephone number that can be used, and an email address for the association. And particularly for managed companies, managed HOAs, that can simply be the telephone number of the management company. And then if I need further, or you need further, or anyone needs further information, you can contact that particular HOA. So again, this is requiring some significant changes, and what he changed is good, but it's not nearly what we need to have to abide by the confidentiality. I know my HOA has not registered because they don't want to disclose this information, and we're self-managed. And I didn't realize that some of these others are doing the other alternative, coming up with an independent email, independent telephone number, and of course you can use your PO box for everything else. So I said, we're going to push back upon this whole registry and let's limit it. And the other thing too is the current legislation requires if you change somebody, if you change an officer, or a president, or a payoff agent, you've got to tell the state within 90 days of that change. That's just burdensome. We're pushing back on that burdensome and saying, we'll give you the name, the address, and telephone number of the HOA, and everything else you got to call or email to get any additional information. So that's my presentation. Any questions?
Yeah, Bruce, I can ask you a question.
Okay.
This is drawing upon your experience as during your time as a Utah legislator. The law requires elected officials to publish, their contact information, right? An email, a phone number, and I'll even say, I think we all agree, an elected public official, right, needs to be more transparent and be able to be contacted than an HOA board member. So, in your experience, how many of the legislators actually put their phone number or personal email rather than a work or an office number?
Most of the legislators, and I didn't, but most of the legislators had separate phones that the legislature would actually issue separate phones for them. And they have a separate email at le.utah.gov. And they'd use their office perhaps as the address so that they weren't revealing any information. They don't do this either. Now, I did when I was a legislator simply because I chose to do that. But I was offered another cell phone. And I thought, nah, I didn't want to, but it was offered. That's the way the legislature does it, is they use their legislative email and a legislative issued phone to give that contact information.
Oh, thank you. No, I had a similar experience, when I was in public office. We had a government email, and then there was a more central phone number rather than all of our personal info. And so that's one of the things that, again, when we talked to Representative Walter, is asking him. I looked it up. I think I talked about this with Ryan. I'm pretty sure the information that he's got is not his cell phone number, right? So why should they be expecting the HOA board members to do something that they're not doing when they're even held to a more transparent and higher standard, in my opinion. So
that's right. And for the self-managed HOAs that don't know how to create a new email address, we as the organization can help them do that. But it's really easy, unless you want to have a domain base, but you can just say at Gmail and create some address for your HOA. So
Yeah.
not difficult to do. And same thing with the telephone number. You can get a Gmail telephone number. Easy.
Yeah.
I had one more thing with the concern on the ombudsman's ruling there.
Yeah.
So in this ruling, I think it's significant to note, and especially for communities here, this section where the committee didn't authorize the management company to list their information. So that ombudsman said, look, you need a resolution by the board that says you can list the management company. So in effect, that's kind of the new ruling on the
Yes.
ombudsman side, is right now without this law passing, that you need the board to, in one way, usually a resolution, right, authorize the listing of the management company on their behalf. So the ombudsman's saying, look, if the board didn't say that they didn't want their information listed, the ombudsman's forcing the board members' information listed. That's kind of the operations, the way it's working now, and this law will replace that with a requirement to list the president's information. And then this is a little ambiguous, each manager or management committee member. So is that each manager or is that each manager and all the committee members, right? And obviously we think Walter is going to want everybody's listed, but no, just by way of operations, we need to be getting a resolution from the board if the management companies are not listing all of the board members' information currently.
Completely agree, Ryan. I think every board should be adopting in their minutes and ideally a formal resolution, a designation of the preferred email and phone number that they want to have used for official HOA business so that they don't have to put their personal email and phone number out there. I think that's a great suggestion. Just want to highlight too, think about a community that has 1,000 homes or 2,000 homes and all of the various problems that could be coming to a board that they intended to have funnel through an orderly portal system or a website that helps track that provides accountability and transparency about what's going on. And I also don't think it's good policy to put board members that are supposed to act as a governing body together in a position where we're actually encouraging individual conversations. I mean, in city councils, we discourage that often. We don't want people going to individual council members and bartering or, whatever happens. We want that to happen as a governing body so that the community can understand what has influenced a board and a governing body. And this would discourage that. This would allow people direct contact and that direct dialogue that's not necessarily contemplated in how we govern an HOA.
And one other note here is interesting. I contacted the director of the ombudsman office and I said, with the old HOA listing, we could buy a listing of all of the information, and which we did as the CAI. And she said, well, our privacy person with our department says that's a lot of information and we shouldn't be revealing that information. So we're not going to make that available. But if you go to all of the screens, you can still get the same information. So they are being told by their privacy person in the Department of Commerce, they shouldn't be making this information available. But what are they doing? That's what they're doing. So,
yeah, great point, Bruce.
So I know we've got a little over 10 minutes to finish up the last little bit. I'll just reiterate, hopefully everybody on here sees there are serious issues that we have with HB 406. And again, we're trying to work through some of those. And if we can't get the changes that we're seeking, we'll be asking everybody to really throw in support and reach out. And Tyler already mentioned it. Feel free to do that now. Reach out to your legislators to let them know that this is very problematic in its current form. So
yeah.
Moving on from that, we'll look at HB 306 from Representative DeFay. Tyler.
Okay. Before I jump into that, I saw a question coming in the chat whether the Ombudsman's office has published a list of uniform resolutions, and they have not. There's nothing like that that's been published, so that resource is not yet available. Okay, this is an interesting one. Representative DeFay, there's been a lot of pressure over the last several years to revisit and potentially cap reinvestment fees. So we've already talked about caps on administrative setup fees, or what is currently called association transfer fees. This is a different topic. Reinvestment fees due and payable at closing, upon and as a result of a closing, and that money has to stay in the HOA. The proposal by Representative DeFay, and to her credit, she's working very closely with us. I met with her Monday along with legislative drafting to further refine her bill. If you look at what is currently published, it would be misleading because she's already asked for changes to the bill. But you could pull it up. It's HB 306. Just expect a revised draft coming out in the next few days. Under Representative DeFay's proposal, HOAs that have very few amenities and very few common areas that they're responsible for would be capped at 0.25%. So let me give you an example. If in your HOA, all the roads are public, and the only thing that happens is a little bit of landscape maintenance or snow removal, and you don't have a detention pond, and you don't have a retaining wall, and you don't have street lamps or a tot lot or anything like that, then you would be capped at 0.25% rather than 0.5%. If you have exterior maintenance, roofs, a clubhouse, a pool, nothing would change with respect to your HOA. But if you're an HOA that has no critical capital infrastructure other than just a little bit of landscape maintenance, you would be capped at 0.25%. So it's really that simple. It's an easy concept. It's very difficult to draft to avoid having unintended consequences. So that's what we've been working diligently on, is having the draft prepared in a way that doesn't limit HOAs that really benefit from the full reinvestment fee. So that's in the works. Stay tuned. Trevor Midgley says, does the free market principle apply to HB 306 as well? And the answer is, I would say yes, it does. However, we already have a current cap in place. So there's no proposal to remove the cap. And then there are some practical realities. There are some strong forces and lobbies that are behind this. And so we have to evaluate our likelihood of opposing it outright versus reaching a compromise that would be beneficial for our industry. So, additionally, some of this may tie in with what happens on Representative Walter's bill. So, there's a lot of dynamics in the political process that we have to keep in mind, and we seek guidance from our advisors to CAI, and but your point is well taken, Trevor. Sometimes those principles apply equally, and we don't get the outcome we desire. Trevor asked if the LAC could support a bill to cap new home sales at 500,000. Hey, how would that be? It would make home affordability achievable for everyone. Let's just say new homes, no new home could sell for more than $500,000. Okay. Let's talk about the last few. Relatively straightforward bill here by Representative Peterson from District 1, Box Elder area. The state has a code that identifies areas that are in a wildland urban interface. And what this says, there's been a lot of recommendations with heightened risk for wildfire. We've seen it in California. We've seen it throughout the country where homes bump up against a wildland territory. The wildfire risk is greatly increased. There's a lot of effort being put in place, and a lot of this is driven by the insurance industry to make sure that defensible space is created around the homes. So we want to have a buffer area where we don't have trees that will light on fire and potentially cause the whole neighborhood to be impacted by these wildfires. What this says is that county, city, and any other restriction by an HOA that would otherwise interfere and force you to have vegetation in defensible space would you would no longer be able to enforce that. Now, the defensible space is a relatively small buffer area around the home. Ryan has identified a community he works with where sometimes these lots that bump up against the wildland interface are 10 acres. And so the defensible space would not be that full 10-acre space. It would be some relatively small area immediately around the footprint of the home. And what this is saying is HOA rules, along with city and county ordinances, would have to take a back seat. You couldn't force people to plant trees in that area, for example, or shrubbery that would create a fire risk. So interested in your feedback. If you think this is problematic, please bring it to our attention. The LAC to this point has not intended to oppose this legislation yet. Okay, 122, we can go relatively quickly. Senator Harper, the language is nearly identical to Senator Walters on these two small points. The publication information about homeowner rights and dismantling an HOA. So there's the legislative drafter took the idea from a senator and a representative and drafted the same language. It's just in two different bills. It's in HB 406 and it's in SB 122. SB 122 does another kind of subtle but potentially important change on the grandfathering provision for rental restrictions. Currently, we measure the date of when a unit is considered grandfather from the date when it is recorded. That's what the statute currently says. This adjustment would say your grandfathering kicks in when the amendment becomes effective. So it's an interesting academic question. How could you have an effective amendment to CC&Rs that has not yet been recorded? I think we can envision what that looks like. In most cases, they're going to be simultaneous or within a few days, but there is a slight adjustment. I'm not even really sure what's behind this bill. I think I'll probably call Senator Harper and ask him what the story is behind this. But that's another little adjustment that's been put into his bill. Lastly, this is not really a big change. It's just additional tinkering and clarification regarding common area taxation. We've been working on this one nearly every year. And really what we've seen is county assessors are still getting up to speed with this concept of you cannot tax common area separate from the units or parcels or lots within a homeowners association. And every year, our office drafts letters to county assessors saying you can't give us a separate tax bill, and they're still getting up to speed with it. What happens in this bill 877, in addition to some other tax changes, it provides a clear definition of common area. It pulls it from the Community Association Act and the Condo Act, and it just clearly states you cannot tax it separately from the lots or units. You can factor in the value that the common area adds to a lot or a unit. And we think that's already been happening. We think that the fair market value obviously takes into consideration whether this has a pool or a park. So that's perfectly fine. But you can't send a tax bill to the homeowner and one to the HOA for their common area. And that's
There's
it.
a couple of questions. One, Richard, he said HB 306 seems reasonable if the HOA has limited need for reserves, which aligns with how it is described. So that is I mean, that's the practical argument that they're making on that. One of the things that we have to look at is how are they describing that in the bill so that you can actually tell how it applies to different communities.
And the way that's proposed right now is a definition of capital intensive infrastructure. And if you can't show that you have anything that's capital intensive infrastructure, which is a fairly low hurdle, it's pretty easy to show. It just means you have something you have to pay for that requires repair, replacement, and major maintenance, then you would meet that definition. If you can't point to a single thing like that, then you would not have capital intensive infrastructure and you would be capped at that 0.25%.
Um, okay, a couple other things, and then I know we're getting to the end, so um, let me just address a couple of these, and then we'll come back for some other questions if we need to. Cooper's management was asking, can we get a recap or a slideshow that they can go and share with their management committee members and board members? So we can get that sent out. Again, the big thing is to remind them this is proposed. It's not passed yet. After the session's over, we will do another one actually talking about what is, what passed. Paul talked about the bill isn't bad for insurance companies on the maps. Let's see. Is that oh yeah, the wildfire one. And yes, I know that can be impactful on insurance and being able to get that. So, Paul, we'd love your input on that in looking at that bill. A couple of other issues. Please donate to LAC. There's a lot of things that we're dealing with. Our main expense is our lobbyist, which they're necessary. In order for us to get in front of many of these legislators, we need the assistance of the lobbyists, and they're not cheap. So, please donate personally, or some associations will do what's called a dollar a door. They have a certain dollar amount that is included in the assessments, and then they pass along to LAC to help us with that. We want to thank all of the sponsors for the Utah Chapter of Community Associations Institute, and many of them are also donating individually to LAC, and so we appreciate all of you. There is another event. I think Stacy, you'll send that out. That's for more of the business partners and community managers and those who are donating and being members of the chapter and of LAC. So, okay, that's it. I know we've spent the hour, but we do have a few more questions for anybody who wants to stay on, and we can address those quickly. I don't know, Tyler, Brian, or Bruce, if you saw those as I was talking.
It was really more just, hey, thanks for really no new questions. I think we've got them covered. People are expressing thanks, and we really appreciate people attending.
There was the one about the reinvestment fee proposed bill
Oh, I
require
responded back.
50%.
Janai had asked, the current draft of HB 306 would mandate that 50% at least of your reinvestment fee collected would be allocated only to reserves and not used for operating or other things. We pushed back really hard on that in our recent meeting with her, and she expressed a willingness to revisit that and drop that. We don't know yet, so stay tuned. We'll see how HB 306 gets redrafted, but I don't anticipate that will be a requirement in the next draft.
Yeah, it's great. So one other thing, all of you that are on here, we'd love your support on some of these. Again, reach out to your legislators. If some of you have personal connections with any of the legislators that you think could be beneficial and that the LAC could utilize, or you can introduce us, please reach out to us as well and provide that. And we would love your assistance, always getting in with them. So
We would love your financial donations as well, because that
that's true.
makes a big difference.
It is needed. So, okay. Well, again, thank you everybody for participating. To the presenters, Tyler, Bruce, Ryan, thank you very much. I know it takes the time to prepare this. All members of LAC, all the board members that we put in, I mean, hours and hours, especially during the session as we're dealing with these things. And, many of them are not here, but we really appreciate all that you do. So,
Thanks very much.
Thanks, guys.
Thank
Thank you,
you.
Ryan, Bruce, Quinn. Thank you, Stacy.
Likewise, thank you all.